It's May 7, 2014, current time 10:16 GMT. Jay Misley here with the Daily Forex Trading Outlook. Markets are on hold overnight, but back to a low volatility type market, except for the Kiwi, New Zealand dollar, which reacted to the Reserve Bank's threat of intervention. Something you couldn't anticipate, that comment like that. As far as other things go, look at the low volatility in euro. We've had a 23-point range, 24-point range, 23-point range, whatever it is. Even dollar yen, the Nikkei falls almost 3% and has a 33 pip range. So we're at low levels for the dollar, but more of the same low volatility trading, which I will discuss towards the end of this video, and strategies for trading in it. Today we're waiting for Yellen's testimony to the Joint Economic Committee. More likely she's going to keep the same tone, which most will interpret as being more dovish than hawkish. We're showing no rush to raise rates even as the economy starts to recover. That's the case, and the debate is when the first rate hike will take place, either the first half of 2015 or the second half of 2015. But in the meanwhile, markets are scratching ahead over why bond yields are low. Those seem to be weighing on the dollar, which is more on defensive if the yesterday's breakout. Looking at the charts, first I'm going to look at the 5-minute chart, but let's go to this. Let's start with the daily chart. No change here. 139.05 was the breakout level here. 139.67. Everybody's looking at the same level on top. It hit a wall at 139.50 yesterday. One of my magic levels. Came back down today close to that 139.05, but while above it we get still a bit on dips. Also watch the close. If we continue to close on 139, the market will stay bullish. If we go back below 139, then the range is 138.50 to 139.50 rather than the current 139 to 140. If you look at the 4-hour chart, similar breakout level is 139.05. So we watch that again. And if we look at the 1-hour chart, a little bit different. The breakout level here was 139.89. You can make it 85 to 90 actually if you had a double top here at 85. So there you got your support at 139.85 to 90. With a cap right now at 139.50, blocking 139.67. Depending on whether we have stops up there, we'll see if it market goes for it, but maybe more likely tomorrow than today. Otherwise, we're back into these low volatility ranges. Look at the 5-minute chart, for example, and look how it looks like we've had some huge moves here. But the whole, when you're in a 24-point range, these small moves can really look exaggerated. And you got to bear that in mind when trading, because you can say, wow, look how much it fell. But in essence, it's only fallen 20-odd points. Similarly, it's rebounded here 13 or 14 points, and it looks like it's 400 points. Now, I wanted to talk about low volatility and how to trade it. I've come up with some strategies to trade in a low volatility market, or what I call a market where prices don't change much. You've seen me post links or embedded links in my videos before. This is one I really suggest you take a look at. Click through, sign up, read it, and I think you'll really benefit, because I think this low volatility, no matter whether we go into this dollar downtrends continue, we're still going to be in low volatility downtrends, because the market just doesn't seem to have the punch to make big moves. Even yesterday, the euro move was basically 80 points, and most of it took place in a matter of minutes, and that's considered a big day, where in previous times anything under 100 points would seem to be a small move. So here, the link is right in this chart. I think you should look at it. My next video will deal with the ECB meeting, but in the meantime, I think you want to look at our strategies. It's free, and all you have to do is click on this link. Good luck, good trading.